Hey, Bulls and Bears, it's Monday, February 21st, 2022. Thank you for joining me today. Let's get into some financial economic news. We got a bit to get caught up on today. Let's start off here in the housing market, the housing bubble 2.0, as many have called it. And more signs of major distress, not just in home prices, but take a look at this headline here. This is out of Money Wise. 37% of real estate agents could not afford to pay their rent in October. Another bad sign for the housing market. So this continues, and it's more than just prices have stopped rising and they're falling in many markets, most markets. It is the big decline in sales. And when sales drop, when volume drops, real estate agents don't have a paycheck, right? As of September, the number of newly listed homes had dropped 20% from a year before. People think that that supply is not a big deal, that it's all about prices. Well, volume and the number of homes for sale, if there's not enough homes for sale, there's going to be less transactions, and that's a huge part of the economy. It doesn't just stop at real estate agents. You have the furniture stores, the home improvement stores, all of the loan officers that are on commission, everything involved in the real estate market. The agents, of course, a big part of that. Dropped 20% from a year before, the number of listed homes, and are lingering on the market for 32 days, which is 13 days more than last year. And that's according to Redfin. So we're going to have a lot of agents in big trouble. Combine that with all the other layoffs happening, the tech sector, Amazon, and so many companies that we've laid out here over the past, 6 months to a year are laying off a lot of people, right? FedEx laying off people as the holiday shipping season is getting underway, right? So it's not looking so good for the economy. There's still people out there telling me, that I'm wrong. The economy is actually great. Just look at the stock market. Everything's fine. In October, 37% of real estate agents struggled to pay rent in their offices, a 10% increase from the month before. Wow, 10% in just a month. So at this pace, could we see half of the real estate agents wiped out just in a few months? So wow, the housing bubble is more than just falling prices, and we can see a lot more job losses. And I think we're just at the beginning. We've yet to see the real fallout from the slowdown in the real estate market. The National Association of Realtors saw its membership rise to an all-time high of 1.56 million agents in 2021. Remember what I told you? When the housing market is booming, agents pop up left and right. They pop out of nowhere. That's up from 1.49 million the year before. But with available inventory dropping off of a cliff and interest rates on the rise, many agents are floundering. So these people that got in last year trying to get into the mania or get a piece of the pie, the piece of the mania pie, a lot of these agents are going to be a year and out, and they're going to have to find a new career. And with everything else falling apart, with all the other sectors of the economy laying off, where are these people going to work? And we asked the same question, a couple reports ago when we talked about all the layoffs out of Twitter, Meta, which is Facebook, laying tons of people off. Are these people going to be working in fast food? Because that's the area of the economy that I see hiring the most is fast food places. It seems like every fast food place I drive by now hiring. So real estate agents, over 1/3 couldn't pay their rent. Please let me know what you think about that down in comments. How much worse is it going to get? Is it going to be half the agents are going to be gone out of the industry in a matter of a few months? Well, that's what it's looking like here with this big uptick in just this big uptick by 10% in just 1 month. Now, we've covered a lot of the listings here, how these homes will sit on the market and they'll slowly decrease the listing price, but it's not enough to keep up with the drop in the actual overall housing market. So they end up sitting on the market sometimes for 4 months, 8 months, a year. And if they would just start off at a price that's very competitive and low, they can move these houses. But I think a lot of the sellers are being too strict and too greedy, and they're being unrealistic. They're not pricing their home low enough, fast enough. If you ask the real estate agent, I'm sure most of these agents would like to just come in with a lower price because they know the market's slowed down. But a lot of times the agents are trying to balance between appeasing the seller and appeasing the market. And if a seller doesn't like the agent's listing price, if they think think it's too low, they're probably just going to go with another agent. So the agents are out there competing for listings. So even though a customer may have expectations that are too high for the home price, a lot of times the agents will still go with it just to try to get a chance of getting that transaction and making that commission. That's how it works from what I understand in the industry. So we're going to see how it plays out here, but these homes would sell a lot faster if they would just lower their price and price them more aggressively at the beginning, because the longer you wait, the weaker the market gets, the more you're going to have to drop your price down the road. So just drop the price low enough and it'll sell, but being greedy, now's not the time to be greedy in the housing market as a seller, as an agent, etc. And if you're a buyer, I would urge caution right now. We're just at the beginning. If we are to believe what the Fed is saying, rates are just going to go higher. And, I've always doubted the Fed. There was even a point where I said home prices might not drop because I didn't believe the Fed was going to keep raising rates and allow mortgage rates to go higher. And even though they said that, I had a hard time believing the words that come out of their mouth. Can you blame me? I mean, how many times have we caught them being wrong and lying and everything else, that we've covered here? But to put a little positivity in this, at least the Fed is walking the walk, right? So they're not just talking the talk, they're walking the walk. They haven't cut rates yet. We'll see how long this lasts. There's a lot of people thinking that we're still going to see a big pivot out of the Fed as soon as the next shoe drops. We see, things happening in the crypto market with exchanges going under. People are waiting for banks to go under, for banks to fail. I will be really surprised if banks are allowed to fail. But again, we'll see. I mean, whatever happens behind the scenes, it's really hard to say because, all this is being manipulated. You cannot predict a manipulated market. So that's why I'm always telling people to be prepared for any possible outcome. All right, let's change the tune a little bit here. This is about California. California ahead of recession. California faces a $25 billion budget problem with ongoing deficits. We told you this was going to happen. A lot of companies chose to get out of California, moving to greener pastures or states with a lower cost of doing business. Texas and Florida were some of the big recipients of California businesses. Also, Tennessee was a big one. And, it's no surprise here, but what's California, going to do here? I mean, here I am in California. Now we've got the tech industry going down, massive layoffs out of Twitter. These are California, Silicon Valley-based companies, most of them. And it's going to get really ugly. And I think that Californians, including myself, are probably going to be asked to pay for this. They're going to come to the working people for the help to pay for all the budget deficits and for all the people that lost their jobs because they're going to have to pay a lot of unemployment benefits. And who knows, before it's over, maybe I'll be in the unemployment line. I'll be doing videos from the unemployment line, right? And, my wife always tells me not to talk about negative stuff. I'm prepared for it. It wouldn't be surprised me if I lose my job, I'll have to move, change careers. And that's why you've got to be nimble, be versatile, be able to do something else. Maybe you'll have to work in fast food for a short time before something better comes up. My sister went from working at a farm store to working as a pharmacy tech. And, she didn't like working at the farm store. It was stinky. She had to do a lot of things with animals that she didn't like. She's single, so she could afford not to work for a few months. But she chose to work and just take a job that wasn't her favorite job, just to keep in the labor force and to keep her resume looking good. And if you, keep working, it's better than a big gap in your labor when they look at your resume. So if you're looking for a better job, they're going to like the fact that you at least worked, even though it may not have been the preferred industry for you. So if you have to go to fast food, if you have to do something that you think is below you, maybe that's what we'll have to do. Maybe I'll be sweeping floors. Maybe I'll be putting on roofs. Maybe I'll be driving a delivery truck, and I wouldn't be ashamed of that. That's what you have to do in the economy. I've had times where I've been laid off, and there's always something else out there for those that want to work. All right, so there we go. The real estate agents, where are they going to work at? 1 in 3 couldn't pay their rent in October. Is the housing bubble going to push most of these agents onto other careers? Please let me know. Thanks everybody for being here. Big love. Keep stacking. We're going to big update on silver next report. Silver, you've got Got to have silver, folks. We're going to talk about it more in the next report. We'll just leave it at that for now. Thanks for watching. Big love. Peace.